Okay, Nilesh, thank you very much for joining us in our studio. Big day for us, and thank you for being with us. Well, how do we start? Do you think we should start buying in now? Because as I was telling one of our foreign guests, the rupee is cheap enough and stocks have fallen. And we have, that FII number started declining. Yesterday was only 1,800 crore. You think they're reaching some kind of an inflection point?
It looks like, Lata. Clearly, few things have happened. Most importantly, like what you said, the currency has become a lot more attractive from an investment point of view. Valuations have corrected quite meaningfully. The large caps have corrected 10 to 15% from the peak. Yes. It's been almost about 4 to 5 months of correction phase that the large caps have gone into. On the mid and small cap side, the correction has been as high as 30 to 40% in individual stocks and almost 20% at the indices levels. And clearly, there have been pockets of growth. It's not that, we're looking at the headline numbers and low single-digit growth, but then there are enough number of companies in various sectors which have demonstrated very, very strong growth. So clearly believe that clearly the fundamentals are still intact and the valuations have become more compelling, more appealing.
By the way, just revisiting again more numbers, ONGC is the biggest loser on the Nifty right now, and that's a result reaction playing out. So Darshan earlier was telling us that crude oil realizations have been on the lower side. So and there's, I think, lower other income, which is why the profit is also below estimates. So just keeping that on the radar. Nilesh, hi, great to have you with us on a Saturday today. I just want to get your sense on this FPI selling. And I know we've all been very brave and, as investors and as a country, we need to be. And domestic institutions have done a phenomenal job of absorbing the selling. But in your memory, do you remember a time like this where on a daily basis, usually it's in a pattern, it waves up and down, but it's been this one-way incessant fall. Do you see it changing at all unless there's a major crack on Wall Street? And if it continues in this manner, then what are we looking at, irrespective of the budget over the next couple of weeks and months? Well,
clearly, I think one of the challenges which they have faced is more around their home market doing extremely well. The US pretty much has been the best performing market, at least over the last 1 year. And then the views around the strengthening dollar, the weakening EM currencies, that's clearly been their very, very big focus area. And on top of that, valuations here, they look at it more from a historical perspective that we're trading at premium valuations versus our historical averages. So that's been the second big factor. The third big factor is probably, I'm not entirely sure about this, but India is probably the only large market where foreigners have to pay tax. I think you as an individual, if you were to invest into the US market, you probably don't pay tax in the US, you pay tax in India.
Look, Americans have to pay tax for their market. I mean,
on your home market.
Foreigners.
Yeah.
10% tax across the board of the
if you as a foreigner invest in any major market across the world, you as a foreigner, you have to pay tax in India, not in that foreign market. Okay? So if you clearly see it, I think these are the three factors. One is your home market doing well, two is the valuations, and third is, of course, the tax angle. These have been the three factors. Now, even if one or two out of this give way, which means either the tax gets reversed, the probability of that is extremely
let's not even
low.
Go there.
But if, let's assume, because of this correction, the valuations look a little more attractive or more reasonable, or if the home market,
the US market starts
looks more expensive in context of the overall growth, that India earnings will grow in double digits, US earnings will grow in single digit, and therefore let's move to India. I think if any one of these three factors starts to play out, this trend can reverse.
But the question is, I don't know if you see it on the horizon anywhere or not. And if you don't, my question was, if that inflection point doesn't come anytime in the near future, then can a capex announcement today, we are at 11.1 lakh crores, now let's say they say 12 lakh crores today. Can just an announcement like that from the budget revive market spirits?
It can. I think the first is do no harm. I think if that's the starting point, which means don't raise taxes. If at all, simplify taxes, rationalize taxes, maybe lower taxes. That's a good, useful starting point to have. After that, if the budget continues to be growth-oriented, there's a huge focus on capex, on infrastructure. If there's a better capital allocation, the capital allocation which has been happening over all these years, if that gets accelerated even further, these could be good trigger points.
Absolutely, I think well put. First to no harm. I think we'll live with that. And anything on top, of course, is cherry on the cake. Let's throw.
Nilesh Shah is with us. So Nilesh, some final thoughts. At the end of the day, it's all about portfolios and what to buy and what not. Now, I know in our earlier conversations, you've always been a big bull on technology, that too futuristic technology, some of these cutting-edge, internet companies. So they're going through their own challenges. I mean, Zomato and them acknowledging the competitive intensity. So are you still as optimistic? And what else beyond them?
Well, the recent correction has made me even more optimistic.
Oh, okay.
Just look at where these stock prices were a month ago or 3 months ago. From there, they all have corrected probably between 20 to 40%. So be it essentially your quick commerce guys, your payment companies, travel aggregators, or some of the other platform companies providing services to mutual fund companies. This all has kind of corrected quite meaningfully, but the long-term prospects remain intact.
Okay.
So clearly, I believe that they've become even more compelling than where they were maybe a month ago, 3 months ago.
And
Nilesh,
budget related?
Gold. Budget
yeah.
related. Because the expectation is that gold taxes, import duties were lowered because the government had to meet the sovereign bond outflow. But now they expect it to be raised because that's a major outflow for India in terms. You look at gold stocks at all?
Gold stock, the jewelry stocks, yes.
Exactly. That's what I meant.
Yeah. I think that's an interesting segment. And today we have a choice. 5 years ago, there was only one title. Today there's a choice, enough, and there's been a meaningful correction in many of them. I clearly believe it's a great place to be, especially if you're betting on an aspirational India, the shift from unorganized to organized, and the non-discretionary, the discretionary spend. So I think that looks fantastic. That space looks very attractive.
It's budget day. We can't let you go without asking industrials and capex. Whatever is the view, and if you like, this space at all, then maybe, some idea of the kind of stocks you'll play.
Yeah, the cap goods, I think, is a fantastic place, especially companies which are leveraged to the potential in railways, in defense, electronics, overall. I think manufacturing, infra, and capex cap goods, I think that's a fantastic place to be.
Good you brought up actually, electronics, because we just had that conversation with Dixon. What's your sense on this space? The thing is, when there is a good theme and a growth theme in the market, the whole market latches onto it. Then everybody has the same situation of 100p and 90p and how you deal with that. Some of it has started correcting, but again, how do you find them in terms of valuations?
No, I mean, optically, of course, the valuations still look high, but I think if there were to be a further correction of maybe 10-20% from there, I think it's a good place to be. I think growth will continue for the next 4 to 5 years. It's one of those very few pockets in the markets where essentially the investment opportunity aligns with the national priority. And therefore, I think it's a great place to be.
Okay. Keynes has fallen 33% from its highs, so perhaps attractive. Thank you very much, Nilesh,
Thank you,
for all that
Thank you,
advice.
Surabhi.
Thank you.
But we have